Right, hello and welcome back to another video. So this is a video running through my portfolio results for the month of June, all the buys and sales I made during the month, which were quite a few actually. It's been quite an active month. Got rid of quite a few stocks, purchased quite a few stocks, a lot of activity going on, which I will run through all of that soon. One thing before I forget, I've made a note of it here because I always forget to say it at the start of the video. I don't want to be like one of those hard sell people, but if you are watching and you've watched any videos in the past and have enjoyed them, please hit that like button. I know everyone says it on all the videos, but I've come to realize there's a reason people say it. It does matter. It really helps with kind of the algorithm, just getting the video in front of people. So I'd really appreciate that. Thank you very much. Without further ado, let's crack on with the usual structure. So for the month of June, the portfolio was up 2.85%, which you can see here, versus the FTSE All Share, which is the one I always use as my benchmark, was down 1.44%. So again, I'm happy with that, a really solid month. I think the months of kind of 5-10+ % gains will come eventually if I just stick with my system and keep refining it and limit the mistakes more and more. But for now, when I'm kind of on this learning journey, I haven't been doing this a huge amount of time, especially this strategy. I'm more than happy with any positive gain a month really, but 2.85% I'm very happy with. We had a big drop down here towards the end of the month, which I'll get onto in the sales, but that was the mini sell-off in the US market where Nvidia and a couple of other big tech stocks took a big hit. I'll get onto that more further on in the video. For the year to date, we are now up 8.28% versus the FTSE All Share 5.2%. So there was a period where we were behind the FTSE All Share for this whole section here. So it's good to be ahead again. I'm as I say, I'm very happy with that. I think I'm a little bit low here. Yeah, there we go. I'm very happy to be ahead of the FTSE All Share, and I want to just continue that now if we can through the rest of the year. And then for the lifetime of the portfolio, so this runs from January 2022, which is when I started using my checklist system. The checklist itself has been revised and is now quite different to how it was at the start then, but the whole of this period, the whole of this portfolio is using a checklist system of some form, giving a stock a score and it having to have a high enough score for me to be allowed to invest in that stock. But yeah, since inception, we're up 22.24%, which is okay. It's good enough. I mean, especially when you consider the FTSE All Share is only up 6%. So we are almost, we're not, but we're almost quadrupling the FTSE All Share. We've more than tripled it. So in that respect, it's a very good return. We're really beating the benchmark. But I feel like if I had that time again from now, I could probably do better than that. And you can see here, it says I've got 12% in cash. So there's still room for some more purchases. Though I do have cash available that I can add to this portfolio if I need to, if I run out of cash. This is the one I always show. So this is my portfolio as it stands. This is all the stocks, the names of them on the left, and I've got it ordered by the percentage gain at the moment. If I just move this across. So I'm very happy with how this is looking. We've got quite a few large gainers. Meta's up 190%. Microsoft 45%, and then we've got lots in like the 10s and 20s. I'll a spoiler for later, but I sold Nvidia, which was up in the 70% as well. But what I really like is that I haven't got any stocks at the moment that are greater than 5% loss. And that just makes me feel so much better looking at my portfolio when I come on and I see this, because in the past I've had stocks down 30, 40, 50, 60% plus. And I actually still do have some stocks that are down kind of 50% plus in I call them my legacy stocks. So these are stocks that I bought before I started this portfolio, before 2022, when I really didn't know what I was doing. And I just kind of bought stocks based on stories and rumours and what I felt like. All they're fairly small positions, so they're not that impactful, but I do hold a few stocks that are down big still that I've just kind of put aside. I've made the decision, as most of them are reasonably decent quality companies. I think they're not kind of disasters, so I've made the decision to put them aside for a 3-year holding period and then review after that 3 years, because I think a lot of them are coming back. But yeah, just for full transparency, because sometimes on Twitter and things, I post that I hold it as a legacy stock. So that's what I mean when I'm talking about that. They're stocks that I do still hold, but they're not part of this portfolio. They're ones from ages ago when I didn't really have any kind of system. But yeah, in this portfolio now, nothing down more than 5% at the moment, which I am incredibly pleased with. It's very nice to look at a portfolio when it looks like that. And then I've added a couple of screenshots on this month. So this is all stuff you can get off Stockopedia if you kind of put your portfolio in Stockopedia. But this is kind of the breakdown of what is in my portfolio. So you can see at the moment we're 50% technology stocks, which I don't think I really want to be too much more than that. But having said that, if a technology stock sets up really well and breaks, I'm probably still going to buy it. But it's good to just keep an eye on it. I would like this to be more balanced. It's just there's not a lot of stocks in the other sectors setting up as well as the technology stocks are at the moment. But the good thing about the system I've got is if it starts to turn, the technology stocks start to fade and kind of cyclicals or financial something come in more, the rules I have in place should just automatically transition me across. If the technology stocks start to decline, they'll hit my stop losses, I'll be out of them, and then I'll have the capital for when the other stocks start kind of going up, and I'll just naturally transition into the sectors that are doing the best. And this just shows you a further breakdown kind of within, it's basically the same as the pie chart, just done in a different way. And then this is, so Stockopedia does, it gives scores as well to individual stocks, and it has categories. So this is all green, but they have red categories as well. So stocks they don't recommend that they think are quite poor, or just neutral, which is just grey. But I don't use Stockopedia's stock rank as any kind of decision factor in putting a stock on my watch list or purchasing a stock. But it's nice to see that my system is obviously quite aligned with Stockopedia's. So this is all of the stocks in my portfolio. It shows them all on the side here, and they are all green. They're all, well, most of them are high flyers, and then I assume that's probably just one is a super stock, but they're all green, which is very nice to see. And I'll move this across again. On this side, this is the percentage weighting of all the stocks in my portfolio. I am now, so this was a recent thing in the past couple of months, targeting a 5% entry position whenever I purchase a stock. So I want everything to start at 5%. So some recent purchases that I'll come on to later, they start at this 5% line. Because some of these stocks, they haven't actually, a lot of these like Keystone Law, Regeneron, a lot of these ones that are less than 5% are actually up in terms of gain. I just had too small a starting position in them. And I've put an arbitrary 20% max position. So if a stock kind of quadruples from the starting position to 20, then I have to take profits. But I'm actually taking profits before that, really. I've taken some profits on Meta already. Just when it gets too extended, I like to take some profits off. So I don't think I'm ever really going to reach that 20% threshold. So that's all of them. So let's get into the buys and sells that we made this month. So we'll start with the buys. And the first one was Intuitive Surgical. So this is a US healthcare company, a robotics-based one. They manufacture and sell all of the, well, not all of them, but not all of the ones on the market, but they manufacture and sell kind of robotic surgery machines to help and assist with surgery. And they've been doing very well. They've been going on it's not been a really sharp uptrend, but it's kind of a gradual uptrend that's taken quite a few breaks along the way. It's actually a stock I've held in the past, back a year or so ago, and sold out of. I'm not sure why I didn't enter here. Who knows? Sometimes I just miss things, or it's not on my list at the time. It might have not had a high enough score at that time to get onto the watch list, which is probably more likely to be the case. But it came back onto the watch list in this period. It was kind of going sideways for a while. I had this line in here as a kind of the upper resistance. I was waiting for it to break through. It had quite a few attempts here, but if you look down the bottom here, there's very little volume in this stage. Whenever it was actually breaking through, there wasn't much volume. It broke through on this day with lots of volume, and there wasn't that much volume until the end of the day on this day, so I didn't actually enter on that day. I kind of just wanted to make sure the volume came through. It did by the end of the day, so I entered on the next day, and I actually entered, so the midpoint of the circle would be my entry. I actually ended up getting in towards the low of the previous day's movement, so it turned out quite well in the end. We set a stop. I can't remember if this is just exactly 10% or it's below. No, it's 8%. So I would have taken below the 50-day and below this kind of like sideways range here. If it breaks through there, it's very likely to go down to the bottom of this trading channel again. So that seemed like a sensible spot. So there's an 8% risk on this trade, and because it's already been in an uptrend, I have targeted it as a trade rather than kind of a longer term hold. So my target is 25%. So we take it from here up to the top, 25%. That's my sell target. I will still have a rising stop loss. So let's say it came up here, pulled down. I would then raise my stop loss to that point on the 150. If it kind of went sideways for a while and then came down and hit my stop, I would sell at my stop. Obviously, so it's not kind of get up to there or nothing. But if it carries on rising in an orderly fashion and reaches this point before hitting my stop, I will sell at that point, just to lock in that nice 25%. I'll get onto a stock later where it's not a trade, it's more for a longer term hold, and I'll show you how the setups differ. But basically, this is just, if it's already in a reasonably lengthy uptrend, I'll go for a trade. If it's been in a downtrend and is turning and starting a new uptrend, then I'll go for a longer term hold. And I'll just show. So this is the snapshot I did for them from their last earnings. This is not the most recent format yet. It will come around to the fact once all the after next earnings season, it will all be the new format. But this is the older format. But you can see guidance was for accelerating revenue, decelerating EP earnings, but still 31% growth year over year. A lot of positive points in their kind of commentary. I'm not going to go through everything on each one because it will take too long. But if you want to just kind of pause the video and read through, you can do. I'll just move that so you can actually read everything. But that's just a quick snapshot. You can see their earnings a bit accelerating, and yes, a bit of deceleration. But very solid, steady, reliable growth, always in kind of the 10 to 15% range. It's just quite a steady, reliable growth stock. Next buy was Lam Research. So this is a stock that has exposure to the AI and data storage and semiconductor, all of that whole movement. They do the wafer imprinting, which is required for printing all of these semiconductors and chips and all of that kind of stuff. So they're very much in that space. Again, this is one that's been on a very decent uptrend for quite a long time. So it's another one that I've targeted as a trade. I think I've set 25% target on this as well. I'll set 25% target if the market is good. If we were in a bear market, then I would reduce that target to kind of 15% or so, maybe even 10%, just to kind of get a quick profit and then get out. But yeah, again, similar situation. It was coming up. It took a breather, was going sideways for quite a while, quite a tight trading channel. And I was just waiting for it to break this upper resistance. It broke through on this day with some decent volume. I've got a note here, missed a while in Portugal. So I was away for a week in June on a golf trip in Portugal. Had a very lovely time, lots of good golf, good company, really good time. I did think that I was going to be kind of paying a bit more attention to the markets than I did. I really didn't pay that much. I kind of just had a week off. So I missed a few setups. This is one of them. Came home and I decided to enter on the Monday once I got back, because it hadn't extended too much from where it broke through. I decided that I still wanted to enter, because I could have even entered at the high of that day. So I really wasn't sacrificing too much. I entered then, and we're just waiting here to see what happens. I've got this is a bang on a 10% stop loss, which is just nicely below the 50-day moving average. And we're targeting a 25%. So it's 2.5 risk to reward. We're targeting the 25%, and hasn't really moved since the start, but we'll see what happens with this as we go along. Next off, this was so this one didn't go as well. So another one in the same kind of space. This is Super Microcomputer, a US stock, and they do memory, like dynamic random access memory and solid state drive memory, all of that kind of stuff that is essential for everything in the AI space and data centers and all of that. So they're a very hot stock. They've had a very big run up. They've been kind of going sideways and kind of down for a while. And there's been a lot of buzz about this stock. There's been a lot of talk about it. I had my eye on it. Really, so this is something that's a hindsight thing. I should, and I'm going to now, I will wait for it to break this high here. So this setup does work quite often. So it came up here and it broke this recent high. So it put in a higher high, which sometimes does work. And I have done that kind of setup in the past successfully. So I just went to get a drink. So it broke this higher high, and I made the decision to enter. As I say, there was a lot of buzz around the stock. It had quite a strong run up with some volume coming in here. It had volume on the day, and on the day it looked really strong. It opened here and just ran up with volume on the open, and I just entered then thinking that was going to be a break and it was going to continue running up. It snapped back on the day, closed down here, so I was instantly 8% down on the day, so not ideal. When I entered, I set my stop down here, and the next day it went down through the stop. I sold, sticking to my rules. Sometimes I will wait until the end of the day to see if it will come back above, which it did. But on this one, it was just such a volatile movement. The previous day being with that range of movement and falling down the next day, I thought it could easily have just carried on down that day. And so I didn't want to take that risk. It wasn't the kind of stock that I wanted to give that room to see if it was going to kind of pull back up. So I just sold as soon as it went through my stop. The next day it kind of went down even more, and it's kind of been hovering around there. But it's on my watch list. It's got a really good score, actually. It's got a score of 44 out of 50 on my checklist. So it's actually one of my highest scoring stocks with my checklist on the watch list. So it's definitely one I do want to get into, but that just didn't work out on that occasion. So I think I'm going to wait for it to break through the higher level, just because there's more likelihood of that continuing from that point rather than breaking through kind of a level in the middle of the channel. And all of these, I should say, so Super Microcomputer, Lam Research, and Intuitive Surgical have all been 5% positions. So that's my new standard entry. And then finally, the fourth buy of the month is a UK stock. What are we doing? Public portfolio. And that is Supreme. So come on, load up all the lines. So there's a bit of controversy around this stock. I've seen some kind of discussions and things on Stockopedia, on the comments and things, because this is a company that a reasonable portion of their business is selling vaping products. So I don't want to go into that too much. Everyone's entitled to their opinions. Everyone can do what they want to do. The way I look at it is, because there's the big argument around it, is that there's like a underage vaping problem. I don't believe that Supreme are targeting underage smokers at all. I've watched a lot of their webinars. The CEO, Sandy, has been asked direct questions on this. They are doing a lot of things to working with the government on regulation things to prevent that. They've changed their packaging to very boring kind of plain packaging, no colour on there. They've changed the title of their flavours. So I just don't believe that they are actively targeting underage people for vaping at all. And in terms of the underage vaping, it is illegal for under 18s to vape. So I feel like that's either a regulation problem or a problem on the retailers or even parents. It's not legal for them to, so I don't really see what the argument there is. And yeah, the other reason I don't see it as that bad is vaping is helping people to give up smoking. That's kind of the reason that vaping came around in the first place. Supreme even have a government contract where they supply their vaping products to help with NHS and government schemes to get people off smoking and onto vaping because it's better for their health. So I don't have the moral issues with it that some people do, but I kind of understand some people's arguments, and everyone is entitled to their opinion. The ones that I have more considered is the disposable vapes, because they are doing damage, but that disposable vapes are being banned next year, so that's being knocked on the head. And Supreme are doing quite a lot in that regard. They've developed their own rechargeable vapes, and the companies they're working with that they kind of distribute their products, they have also all. I've watching a webinar on it that Supreme put out yesterday or the day before. Their distribution partners that they're working with have also developed rechargeable vapes, like new pod systems, so they're not disposable anymore. So it's good to see that that's being sorted out. Anyway, rant over. As I say, I do respect everyone's opinion. That's just my thoughts on it and why I have decided to invest in Supreme. But back to the actual trade. It's been going sideways for a long time, kind of in this tightening trading channel, and it did come down from a high up here. Been going sideways for a while, broke through, and has then developed a new little channel. And I was just waiting for it to get a true breakout of here. On this day, you can see down here the volume came in, huge volume, 468,000 when the average is 157, so 3x volume to usual. It opens here, it was rising up, and then it kind of hovered around here, and I went on to buy then. I left it for about half an hour to check the volume was coming in, and I went on to AJ Bell to buy. And what I'll do is I'll look at where the current price is, and I'll have like a maximum price in mind that I'm willing to pay, so that when I click that order, I know as long as the price is below what I'm willing to pay, I'll just click accept, so I don't have any indecision. So I can't remember what it was, but maybe 146 or something was the maximum I was willing to pay. It came up and it was below that, and I instantly clicked accept. And it turns out it was down at down here, 141.5, which is actually below the breakout. So I got a really, really good price. When I bought it, once I'd clicked kind of accept, I was a little bit concerned that it was gonna start falling back, but it didn't. It was just a dip down and came straight back up. So I ended up getting a really good entry on this one, unusually good entry. And since then, it just went on a huge run, and it's up. It's 18% now, even with the pullback. At its peak, it was up 33% in a week. So it's been a very successful trade so far. And this is one that I'm going to hold for a longer term trade, because it's been in this sideways action for so long. There's a bit of pent up energy, I think, behind it. So I think it will run. Their recent earnings were good. I can pull them up. So this is the new format. So you can see it's got a 38 out of 50 on the checklist score. Really good results, 42% revenue gain year over year and 87% EPS. Forward guidance is a lot lower, but again, listening to commentary from Sandy, the CEO, and the CFO, they've admitted that they are sandbagging these results, their forward projections. The CEO has even said if he was CFO, the figures would be a lot higher, but their CFO is a lot more conservative than he is. And she is making sure that they are giving themselves targets that they can beat. She really doesn't want to come in under their targets. So there is the talk of the disposable vaping ban is supposed to come in April. So that's the earliest it can come in. They're saying that it could be delayed because there's potentially a new government coming in, quite likely to be a new government coming in. And then that would mean things would have to go through the process again, apparently. But even if it came in April, as I was saying, they've developed their own rechargeable vapes already, and the distribution partners which they're working with, which was a big revenue bump this year, they have also developed disposable vaping rechargeable vaping technology, or reusable, I should say. They're kind of replacement pods. So you have the main vape and you take out the flavor pod and put a new one in instead of throwing the whole thing away. And they look basically identical to the old ones. They just work in a different way and will meet these new regulations. So they don't see that there'll be much disruption, but they have accounted for there being a very large amount of disruption. The other things that I believe that they're going to beat these targets as well is they have recently acquired Clearly Drinks. So there's a comment down here, who are a manufacturer, bottler of soft drinks, and they have their own spring on site. So they have access to natural spring water that they can instantly bottle and distribute. And they're saying that is instantly earnings enhancing for them, and it gives them a good position to build on that. They can buy other brands and bring them into that factory. They say they've got a lot of extra capacity for more production out of there. Overall, I just think it's a very well run business. Every time I watch a video on them, I think they're doing a good job, and they are proving it with the growth that they're putting in. So that is the entry on that one. I raised the stop after this big run up. I raised the stop just above my entry, just so I can't lose money on this now. Raise it just to above break even, and I'll just do the usual thing as hopefully this continues to run up. But I'm not expecting it. I think it will slow down and kind of move like this, and I'll just raise the stop as we go. But happy to have that as a longer term hold. If we get stopped out sooner, then so be it. It's a bit of a riskier stock because we don't know what exactly is going to happen when these regulations and things come in. It's a bit more uncertain than some stocks. But I've got my stop there, so I shouldn't be able to lose too much money on this one now. Then we come on to cells. I kind of touched on this earlier. But the first one, super microcomputer, I went through it earlier, but I'll just jump back on. Go on. Yeah, we got stopped out the very next day. So I think that is the quickest I've ever been stopped out of a stock. So there's that one. Nvidia. This one I was umming and ahhing about. I'm happy with the decision I made in the end, but I think I probably could have got away with not selling. But if I zoom all the way out, so this has been in an uptrend for a couple of years now. I missed the start. I actually don't think the financials were good enough then for me to actually get in anyway. I don't think it would have passed my checklist. But as the whole AI movement has been growing, their financials have gone through the roof. Had a run up and went sideways for a while here, and that's when I started looking and wanting to get into the stock. Waited for the breakthrough here, so that was my original entry. It ran up, went sideways again. I only had a small position at the start here, so I think it was about £1,600 or something. So that was kind of like a 1.5-2% position. So I wanted to add to this stock, but all the way up here there wasn't really a good opportunity. It was just straight up basically. So there was this sideways action here, so I took this opportunity when it broke through to add again to build up to a more reasonable size position. And then we had this super extended run up here, just very, very quick run up without much of a breather. And I was sitting on quite a good gain by this stage. So when it was up here, I think I was on, for the total position, it must have been around 80% up here. And from my original entry, it was 150%. So I was thinking about just waiting for the opportunity to take some profits, really. And on this day, we had this huge bearish candle, so engulfing candle. So that's when it starts above the high of the previous day and finishes below the low of the previous day. So it covers the whole previous day's candle, and that's quite a bearish sign. That means the sellers are very strong. So that worried me a little bit. The next day, it started going down again. So I'd made the decision to just sell my entire position at this stage. So I locked in 71 I locked in 71% gain on my total position and 147% from my initial entry. So very happy with that. Very good trade. Even if this continues higher now, I don't mind. I think just in general, that's a very good trade, very well worked. And I'm happy to lock in those profits. I will now wait. So if this sets up like this again and does another sideways action for a while, I'm more than happy to re-enter again if it sets up. So if this pattern repeats here, I will re-enter if it breaks through. But that's Nvidia for now. Wise did not go as well. This has been a bit of a shambles, really. So we originally, well, no, it hasn't been too bad. The exit was a shambles because it gapped down. So we entered here when it broke through this resistance, rose up, came back down, touched it, and carried on higher. Perfectly good, like good entry. Turned out well. I wanted again, so this is why I've moved away from partial entries. I now just have full 5% position because I wanted to add to this position. So I was waiting for an opportunity to, and I added here where it's broken through this kind of previous high, which is a perfectly good place to add, but it's not the ideal setup. And just for my mindset, adding positions as I go up, I don't really like as much as just entering with a full position. But that came up, and then we had a gap down here, but that didn't actually hit my stop because my stop is rising up the 150. So this last pull down here, that's where my stop was. It gapped down, so we're still above my stop. It's kind of gone like this, so still kind of touched my stop that day, but rose back up and finished the day up here. And then started rising up again. And I thought, oh, okay, we're on our way again. But then this again was while I was on holiday. It brought earnings out and it gapped down. How much did it go down? Only 11% in the end on the day because it came back. But to start with, at its peak, it was down 23% and then came back up. But I missed that. I was on holiday. I wasn't paying any attention. And then where's the Monday? So this is the Monday. Got home, saw what had happened, read about it, and I just sold on the Monday straight away. But because of this gap down, there's not really any way I could have avoided it. I don't think, unless I sold on this day. But I think that was the correct decision because it only just touched into it and actually ended the day up. It showed strength, came back up. It was just the earnings it put out, spooked the market. It gapped down, and I got out. So that ended up being a 20.77% loss, which I don't like because I shouldn't be having more than 10% now, but it was a gap down, and I don't think there's a huge amount I could have done. It's not a full one, this is just one I did it when I came home, just had a quick look what had gone wrong. But it's basically all down to their forward guidance. I mean, they've been going 33, 63, 72, 46% revenue growth, and then their forward guidance is 6. And then the same with earnings. Apart from this minus 16, recently they've been going 45, 200, 242, 272, accelerating. This one 208, so a bit of a deceleration, but still 200% revenue EPS growth, and then their forward guidance is 1%. So the growth has just disappeared. And there's some I didn't really take too long going through it because it doesn't pass my checklist at the moment. And I just sold out, so I just kind of wanted to gather why it had such a big drop, and that's why the forward guidance. So we're out of that one. Not ideal, but also not the end of the world. These ones I'm out of. They're not on my watch list at all, not even to keep an eye on. Hollywood Bowl. Come on, load up. So we entered this back in February. It broke through this line. This is another one, not an ideal entry. It's just one that I kind of wanted to get into because I've done so much research on the stock, and I really like the company and the business that I just my emotion were getting the better of me. I just wanted to own the stock. So it wasn't. Yes, it had put a bit of sideways action in, but it wasn't really long enough to warrant an entry on the breakthrough. I mean, it turned out fine to start with, but then it's just come back, and I originally had my stop down here. it went on a run up, so I rose my stop up to break even. It came down, it just broke through the stop, as simple as that. So we didn't lose big on this one. We only lost 3.65%. And this one doesn't actually pass my checklist at all. It's only scored a 20 on my checklist. The forward growth is not great, so I want to be seeing 20% forward growth for EPS really, and 20% on these figures here. So it's no way near, even though I like the company and I think it's a good stock for kind of a slow, steady grower. It's not going to be putting in super growth. It's not going to have a chart that's kind of shooting up. It's going to be very steady. Good, I think, for a long-term investment, like a coffee can one. Buy it and just put it away and leave it. It does pay a dividend, I think, so let the dividend come in. But not one for this portfolio anymore. So that's not even on the watch list anymore. And then the final sell, Bioventix, which is a UK biotechnology healthcare company. I've not done well on this stock over time. So I had a failed trade back here, which was before my new entry system. I do actually kind of cringe a little bit when I look back at my previous entries before my new system, because it's so obvious looking back now how poor the entries were, but at the time I didn't really understand. Anyway, we bought here and we got stopped out down here under this trend line. And then here, this entry was better, but not that much better because it was too late. Basically, it came up. I didn't buy here where I should have bought, really. Mind you, I didn't have volume. I didn't have volume here either, so I shouldn't have been in this stock. I think I was a bit disgruntled with the stock here because it stopped me out and then bounced straight back up. So when it broke through here, I was kind of like, oh, I don't want to be in this stock because it's just messed me around. So I waited, cooled off a bit, and then decided waited for it to break through here. For some reason, I didn't get in on the day, and then decided to enter a few days later. I'm not sure why. With my new clear system, so this is long enough ago that the system has been revised even more through this stage, I would not enter here because there wasn't the volume. And I certainly wouldn't enter that much later with no volume. But yeah, it came up and it's just come down and I've been stopped out again. So that's 2 failed trades on Bioventix now. It does not pass the checklist anymore. This is not the new formats, but this is the most recent earnings they've had. And it is a company I like. Again, I reckon probably quite good for a long-term investment, but not great for my strategy currently, which is momentum trading. So that was a 11% loss on that one, so close to the 10% that we should be getting. I think sometimes I need to set my stop kind of 9 or 8% rather than 10, because all of these figures include trading fees and tax and all that kind of stuff. So sometimes they can make up 1%, and that just takes me over the 10%. So anyway, that's that, and that is all of the buys and sells for the period. Yeah, so thank you for watching. That's another run through of my portfolio for the month of June. As I say, not a bad month. I'll just leave you on this screen of the makeup of the portfolio percentage-wise. I haven't made any buys or sells so far in July, so it's the 4th of July today. Happy Independence Day, if there's any Americans watching. The general election in the UK is today. I've already voted. If you haven't voted, remember to do so. Don't forget. So it'll be interesting to see what happens over the next kind of few weeks in terms of if there's any impact on the stock market. We will see. But yeah, we're sitting quite well. Another reasonably good month. I'm quite glad with how I am making decisions at the moment in terms of not making too many huge mistakes. I think my entries have been relatively good. Time will tell. I hope everyone else had a good month. And yeah, as usual, let me know how you did in the comments. I do always like to see how other people are getting on. I know I follow a few people that post on Twitter and stuff. I always like seeing how people are getting on and what positions and stuff people have opened and closed. It's always just interesting to see other people's ideas. Yeah, as I said at the beginning, if you haven't already and you did enjoy the video, please drop a like and consider subscribing. I will be uploading these videos every month and occasionally a video in between as well. If for people that haven't seen, I did put out a video in the middle of the month, last month, on that just covers my entire investing process from start to finish. So I'd recommend watching that if you want to see the ins and outs of how the process works. And I have also, if people haven't seen it, started uploading weekly and trading journals to my website, so text format. And I post links to them on Twitter as well if you're not following me there. But yeah, so I've just brought it up. This is my website if anyone's interested. It's just philperryinvestor.co.uk. It's nothing fancy. These are the trading journals. I pop my portfolio updates here as well, and there's some other articles and things as well. You can go, this is the homepage, but you can go to blog, and then all of the blog posts I've done are here, and you can go back through and look at past ones if you want. So as I say, the trading journal, it's just text and images, but it just runs through each day. So Monday, my trades, earning results, and then I have a weekly wrap, thoughts on strategy and things, and then I do a section on looking to the next week. I run through which stocks are setting up the best, and I've started putting screenshots here as well, because I think that's a lot more useful than just text to kind of visualize what's going on and for me to look back on, so I know what the hell I was talking about. So I'll run through and highlight the stocks I'm looking at that I think have got the best chance of setting up for a buy in the next week, for the UK and the USA. And then I will just highlight some upcoming earnings and upcoming news events. So I just realised I completely forgot to put in the UK general election there. It's quite big news. But there we go. So yeah, if anyone's interested, that is there as another kind of resource as well. Okay, that's long enough. Thank you for watching. I hope you have a great July and a great weekend, and I will speak to you soon. See you later.